Hey guys, sorry about the delay in the video. We lost some power last night with the storms coming through, so making the video today. Alright, so let's talk about the week. If you guys haven't tuned into these weekly videos yet, they are a little bit longer, so this will be a little bit longer video, but I go way more in detail and kind of give scenarios for next week. So earlier yesterday on Thursday, I mentioned this diamond we had forming right here. We did break through that, so we are through this level now. So kind of what I'm seeing happening, this is on the daily for SPY, is that we had this nice consolidation from really 360, but with the candle finishes 362.8 to 370.6, and we spent 5 days trading there, and finally end of day yesterday we did break through that. So we closed at 357.18 and we hit a low of 357.04. That is the lowest low we have put in since back here in November of 2020. So we are now hitting COVID levels, which is pretty crazy. So going forward, I was more expecting a breakout to the upside, honestly, so I'm kind of surprised to see that sell-off end of day there. However, it was the quarterly expiration yesterday, and we did have the JPM collar rotate. Over here on the futures daily, I have it. Their new collar, I thought I put it in on my chart. Maybe I put it on the weekly. Oh, I put it on the weekly. Okay. So their new collar is 34.25 put, 28.90 put, and then the calls are 38.70. Now the collar is super confusing, and honestly, it's nothing you can really make a trade-off. It's a protective collar, so it's not really made as like a designation for that's where they think the stock is going to go. I really didn't start following it super aggressively until June in this current collar we're on. So the only thing I can say about the previous collar is we did trade between the levels. We never broke the 35.80, which was the top of the put. And then we did break through the upside, which would back then was 4,000. So potentially 34.25 could be our cap to downside, and 38.70 would be roughly the upside. So again, it's nothing to take a trade off of. It's just kind of where they put their stuff. So it does look like they're expecting a little bit more downside though. So anyways, with us breaking through here end of day, we did put in this nice hammer candle right here. So we could see a double bottom and push up. However, we are in a very big sell-off. So it's actually quite an impressive sell-off, honestly, with just how much selling we've had over the last couple days here. Let me just pull up my notes real quick here. So 7 of the last 8 days have been red, and we have dropped 8.3%. 11 of the last 14 days have been red for a negative 11.5% drop. 17 of the last 25 days have caused a 15% sell-off, and total from the high up here in the 430s to currently, it's been 21 of the last 32 days being red, and we've dropped almost 17%. So it's a pretty good size sell-off, and now we're getting into a lengthy sell-off. So we are officially below the 75% retracement of this overall 2020 bear channel right here. So that would be this blue line. You can see we broke into this. Kind of the same thing if you look at it here. We didn't spend a ton of time above it, and we didn't spend a ton of time above it here. It was pretty quick and then dropped. We've spent most of our time really in probably the 50 to 25% retracement zone. And down here, once we did hit the below the 75% retracement, it was quick, and we didn't do a whole lot of hanging out down here. So potentially what I'm seeing set up on a downside thesis, we have this blue bear or blue falling wedge still forming in the black bear channel. We have current support right here at 357. The blue falling wedge will be at 352.5. And then from there, these supports are kind of like projections. I have really 344, and then the actual bear channel would be by Friday of this week coming up would be 340. So if we continue the big sell-off, we really could see 340s. However, if we decide to punch through and we can close back above 362.8, and especially if we can break this black bear channel and this blue falling wedge right here, we really could be looking at retesting 370, maybe getting up into the 380s if we get a really big push. The biggest thing I'm seeing right now, and it's really easy to see on this chart here, besides this big dead cat bounce right here, where we actually had 4 days of moving up, we have not had any significant recovery bounce. This has just been nothing but selling. I mean, we had one good green day here that got a huge drop the next day. This was Jackson Hole. This was the only significant push up we've had in the last 32 trading days, really. So what I'm seeing is we are due for another big one of these. Now, just because we're due for something doesn't mean it's actually going to happen. And it would be somewhat unwise to take a trade position just off the fact that we have sold off so much, and we can really only sell off so much without a big catalyst. So I am looking for a bigger bounce this week, potentially, just because of, like I said, how much we have sold off here. We really need to reset some of the technicals. I mean, this day right here, which was Wednesday when the Bank of England said that they were going to pivot, was pretty much the only day we've had. And honestly, if this day would not have happened, we would have been at 8 of 8 red days. We would have probably broke the COVID sell-off streak. So I'm interested to see what happens next week. Like I said, I was really expecting us to close over the weekly 200 EMA, somewhere closer to 368 to 370, which would have set up a good catalyst for our technicals for a bounce up. However, this big dump we had end of day, and just kind of the fact that we can't get any momentum up, and we did break below this 360 level and close in the 350s, does worry me. We could open and we could just see a really big sell-off next week. So I'm just kind of watching and see what happens. So looking at the weekly, we're going to show the real zoomed out view here. So something that's interesting, if you see where we dropped here, so this is where we closed at 357.2. If you go all the way back to 2020, so this is August 2020, the high of this is a weekly, mind you, the August 31st weekly was 358.7. So we closed pretty much right at that support right there. The next support we have is 350.5. This, as you can see, what should be a bigger support to hold, just because we had 1, 2, 3, 4, 5 weekly candles that rejected there before we finally broke out. So if we start to drill down this week, 350.5 is definitely where I'd be looking for us to have a meaningful bounce. If we break through and close below that, then the next big support is from February 2020, which is 337, 338 really. And after that, it just gets kind of worse, and we're looking at 320. So this would be like kind of if this level at 320, which was the low of September 2020, breaks, then I mean you can see how bad this gets. So I don't really think we're going to see this level of sell-off. The thing is that we just don't have a catalyst for it. So I've been saying that for weeks, and while everything is terrible and the world's terrible and the markets are terrible, markets need a reason to continue to sell off. And if you look at the daily here, all these big sell-offs, they had a catalyst for selling off. Like, none of these days have really been significant. Besides maybe Thursday was really the first big sell-off day we had that didn't have a catalyst. So, I mean, this was Jackson Hole. We got CPI. We got FOMOC. Everything else has just been a slow burn down. So I'm not really sure. I'm kind of neutral going into the next week. I don't really know what to expect, honestly. I mean, there's definitely a case because we closed below the weekly 200 EMA right here for the first time since COVID, which was right here. But you can see, though, we broke through. This is kind of, you could say, last week where we wicked through, and then they broke the candle below, and then it just rocketed. So there's potential that now that we did break through it, this is bottom and we could pop. However, I mean, you can see we're in a 3-week aggressive sell-off right here in this falling wedge. So the one thing I'm seeing for this falling wedge, then unless we open at 350.4 next week, which is obviously, I mean, that's almost a negative 2% open, negative 1.75 open, then we break this blue falling support here for the falling wedge. That should provide upside technical support. However, if we do break through that, then we're looking at support for this bear channel down here at 345. And here's that 350 level from the first COVID I was talking about, and then there's that next COVID level that I was talking about, and which, interestingly enough, that 338 level lines up perfectly with the 2020 bear channel. So that's that level from right here from February 2020. You can see it's a dead smack there. So if we start getting a meaningful sell-off this week, that would be a really good spot I would look for a bounce at. Resistance-wise, we're going to need to get back over 366.8, which will get us back over the 200 EMA. Closing back over the 200 EMA this next week would be, we could see a bounce up. You can kind of see what happened back here in June when we hit our lows. It's kind of a similar feeling in the markets where we had this huge 2 weeks of selling off. We had 3 here though. We finally hit a big level, and then we bounced. And the next week, I mean, it was a pretty good bounce, and then we consolidated, and that's when we started our move up. Next week is the week before CPI releases, and they already are calling for a lower 8.1% versus the 8.3% from before. So, of course, last time we went down also, but they were focused on the core CPI. So something to keep in mind is that we could see a bullish push up this week if they're in anticipation that CPI is going to be good. Looking at futures, same thing with futures. We have this huge falling wedge. Key for futures, this is Sunday when it opens, will be that 360.50 level. We need to break through that in order to see upside. And then key support is going to be down here at 35.64. Looking at the weekly, same thing here. You can see we are below this 2020, or sorry, the 200 EMA for the first time since COVID. Looking at our channel here, we have the same falling wedge right here. Same thing, unless we open below 35.48, which would be about a 1.5% negative open, and just hold there, then we're going to break through this falling resistance, and that should provide the upside we need. You can see kind of similarly here how we double bottomed pretty much and then went up. I'm kind of looking for a similar idea to happen this week. However, support, if we do start going down, is first at 3,500, and then down here at our actual 2020 channel is 3,400. Kind of the same idea. It's a little off from the channel, but 3380 is that February 2020 COVID level, and then we have up here right around 3,500 is the August highs that you can see we struggled to break through here. So kind of levels I'd be looking for on a sell-off for sure. 3,600 did end up holding. We did end up closing over 3,600, so that is good for really just sentiment. But we'd like to see markets close back over 3705, 3710 to really engulf the weekly and have a move up. So let's take a look at Apple. Apple is definitely suffering. It almost to me looks like Apple finally hit like capitulation this week. I mean, in 4 days, Apple has dropped almost 11%, while SPY has only fell 4%. I mean, this is a big drop. Apple is only 6.5% from its weekly or 52-week low also. So that's something to keep in mind, is that Apple is finally catching up to SPY. So SPY obviously is at its 52-week low. Apple has been just hanging out here looking. I was saying last week how it looks so strong compared to SPY, and then it looked like the non-tech sectors were taking the market down. This week it was the opposite. It almost looked like SPY was stronger than tech, especially Apple. Apple was just getting absolutely destroyed this week. So what I'm watching for here on Apple is we have this black bear channel and we have the blue bear channel. We also have this falling wedge. You can see here this resistance is, this resistance and this downward trend, it's just very aggressive. I mean, this is a big drop. So the one thing I'm looking for is that we need to break through that, which is at 139.7. On Friday, actually, right here, it looked like we were going to break through it, and I only took most of the day off on Friday. In the morning when I left, it was pushing through it, and it looked like it was about to break resistance, and we were going to, try to have a pretty good finish to the week, but it ended up getting, obviously, smacked down and have a very, very red finish at -3%. One of the bigger tech losses of the day too. So key support is going to be right here at that 138.2, and then we have the black level at 137.4, followed by 135.9, and then down here's the blue at 134. Like I said, we're only 6.5% from the 52-week low. So if we have like one of those, Black Monday moments where we just get a huge dump sell-off, Apple really could hit its 52-week low on Monday if it was that bad of a morning. I would like to see this red resistance line broken before I would think about playing calls on Apple. I had mentioned calls up here because it looked like we were breaking through, and then I left, and obviously everything had changed. Looking at Apple Weekly, you can see how big of a week this was. I mean, this was a -8% week. This is one of the biggest, if not the biggest. Yeah, I think this was the biggest red week that Apple has had this year. Let's double check and see. Yeah, that was the reddest week Apple has had all year so far. So I'm interested to see. You can see we're getting into bigger support right here, which is really this 137 to 138 range is support, because right here you got 1, 2, 3, 4, 5 weekly candles that held that support. We had that one, which was the June low, bounce and then up. So we might be at a good support here for Apple where we could look for a meaningful bounce. And you can see we're so already on top of the support of the downward channel that it's hard to really warrant calls. And we're so close, only 6.5% from the 52-week low. It's really hard to warrant puts down here. I said calls, but I meant puts for down here. Key support, definitely this 138.2, really down to 137.5. And then we have this black at 135.5, all the way down here at 131.3. This is an interesting level because you can see back in that June candle, the low of the body was right here at this 131.4 level. So if we get a meaningful sell-off this week, this is where we could look to bounce, and that would put Apple only a couple dollars off of its 52-week low. First resistance is going to be this 141.7, followed by 145.7. So looking at Tesla actually looked pretty strong on Friday, and even earlier in the week when Apple was looking weak, Tesla looked pretty good. Tesla definitely, though, has the most to lose if we are going to go into a downturn, a bigger downturn. Tesla is about 22% off its its 52-week low. So obviously you can see, Apple's only 6.5%. SPY's at its 52-week low, but Tesla's at 22%. We could, if we have a really bad week where the markets, can full on capitulate and dump and everything gets super bloody, Tesla, in my opinion, would be the best short. Just because it has the most to lose. I've been saying this 222 to really 250 level is somewhere we could be targeting. You can see this was the inverse head and shoulders I've been watching right here. However, it looked like right here we were about to break out and we actually could test 300s again. But obviously we had a huge red day on Thursday. And then Friday was looking pretty strong. It had retaken that 270 level. That's something I was really watching. And then it kind of was looking strong, and it looked like we was going to try to get this 276 level back too. And like I said, I left for the day and I came back and Tesla was looking super weak again. So the biggest daily thing to note here is that we lost the 266 level also. This is the first time a candle has been closed below. Yesterday I said it was the first time a candle been closed below 270 since since July. And then this is also the first time here that we broke this level right here since July. So this does set up a downside potential. As you can see here, there's really two falling wedges that I'm watching, and there really could be a bear channel. It's pretty aggressive, but there is really a bear channel too if you look at it right here. So kind of what I'm watching. Kind of lines up perfectly with my error, honestly. First support I'm really going to watch is right here at this 258.7. You can see when it broke out here, it back tested this support and it held it really well, and it had a huge boost and it never ever came back down after that. And then here we kept this. So if we start having a sell-off this week, this will be that first support I watch is at 258.7. If we lose that support, then I really do honestly think, especially if SPY and rest of the market is going down, that Tesla is going to hit the 220s, 240s. So first support for this falling wedge right here Monday is at 261.1, and then we have 257.6, and then from there we got 243.4. So a lot of room to fall. So here's the weekly. The weekly honestly doesn't look that bad compared to like the rest of, I mean, when you look at SPY weekly and you look at Apple weekly, Tesla weekly looks good. I mean, it almost looks like a bull flag, to be completely honest. We had this dump, and we had push up, and now we're just kind of, we could be consolidating for a move up. So that actually, I mean, like I said, the Tesla really looks pretty bullish here. There's really not any good patterns that I see forming here. You can see, I mean, even like the consolidation period, let's see, we got 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. So, we had 9 weeks of consolidation before the move up, 9 weeks of consolidation. Perhaps we're going to have the move down now. I'm not sure. It'll be interesting to see what plays out this week. You can see Tesla has a pretty intense resistance line here, 265.2, which was the close. So if we open below the close and just pretty much drill all week, then we'll hold this downward trend. And key support, which is this June recovery, is right here at 248. This would be a likely bounce point this week. If not, we could look for a bounce here at 244. If we lose these 240s, though, then I mean it seems pretty obvious we're going to go to the 220s. So the VIX remains perplexing. I was saying back in this area, I've been saying since June when we had this huge just straight sell-off, even though we weren't rocketing yet. The VIX has just been so disconnected from the market and just really unhelpful in everything it does. So on Friday, VIX opened. It broke this rising wedge support. So that support. So that should, in turn for SPY, make SPY go up. However, SPY was just kind of sitting. We broke the daily 8 EMA and we came through here, and then we went up. So we could be looking at a bounce like this. This could be a huge bull flag on the VIX, and we're going to see the next move up. You can see it kind of happen here. We had a push up, we kind of consolidated, we had a massive doji, and then it went up and kind of did the same thing. But you can also see the same thing here. We had a big move up, we kind of consolidated, massive doji, and then it sold off. So I think this has happened quite a few times in the VIX. See if I can find another spot for us here. But I don't see one right now. But anyways, so we broke the rising wedge here. So that should mean that fear is coming out of the market, which should mean that SPY is going to go back up. However, if the markets are in consensus that it should be going down, then there's no reason for the VIX to be elevated. So, VIX works off contracts and essentially the fear in the market, they say. So if there is no fear or disagreement that the markets should be going down, then VIX can unwind as SPY goes down. So that's something to keep in mind. We did have this huge push up on the Wednesday to 34.8, and you can see, we went up here, and we're kind of in a similar pattern. We had the huge spike here on June 13th. We dropped. We had one more spike, which could be on Monday, which put the actual low in, and then we dumped. So if you go back to SPY here, this is what I'm talking about. So this was June 13th, which, now mind you, this will be a little different because this was CPI, and then this was the Monday after CPI, and then this was Tuesday, and then this was FOMOC, and then we dumped, and then we rallied. So that kind of does throw off the trend a little bit. But if we go back to, let's look at the March high here, or the May low. Same thing, we had a touch, we kind of bounced, we tried again, and then we sold off. So this could have been our retest and then our sell-off. But really we need to see what the VIX is going to do. It doesn't really want to break below 30 and stay, and it doesn't really want to stay above 33.3. But I would not take a trade base off the VIX just because it's really not doing much. However, if we see the VIX finally start selling off and SPY starts moving up green, then that could be enough of agreement that we should be going back up on the markets. Looking at crypto, it's kind of lost a little bit of its steam. So this is Saturday, Friday, Thursday. So Wednesday we saw crypto break out, close over its 8 EMA. That's the first time it's done that since September 9th, which this was, the week before CPI. And you can see once it did that, this was that Monday to see, this would have been, I think that's like the weekend, and then CPI was on a Tuesday, so this would be Monday. So it went up there, and this was when we had our dead cat bounces. That big, huge one that I was talking about on SPY right here, that we haven't had that same sort of intensity yet. I'm watching for crypto to kind of predict it for us. I was looking pretty bullish here. However, we did reject that 20.2 breakout level, and now we're kind of actually trying to lose the 8 EMA again here. So if we lose this 8 EMA right here again this weekend, especially going into Sunday, and markets open red for futures on Sunday night, then we might actually see a pretty bloody week ahead here. So far, crypto's been pretty accurate in predicting where we're going to go next. So I mean, a drop down here, and we start, especially if we start breaking through like 18.8 support and whatnot, that could start the next crypto sell-off, and that could start the next market sell-off. So I'm watching crypto pretty hard, aggressively this weekend. Tonight's candle, I'd like to see close above really 19.5, but at minimum 19.4K, which would keep it over the 8 EMA. I mean, it's not doing a whole lot right now. It's just kind of just hanging out. So something to keep in mind for sure. But all right, hope you guys have a good weekend. I will see you guys Monday. Thanks for tuning into this video. Hope you guys enjoyed it. If you like what you saw, go ahead and hit the like and subscribe button to stay updated. I am providing my Discord link right here. That's a lifetime link. If it doesn't work, go ahead and send me a message and I will get you a new link. I do have a pre-market update I do every day where I update with supports and resistances and different scenarios that might play out through the day. I also do a live commentary throughout the day with updates and changes, and I do push out buy and sell alerts on SPY and other tickers that I'm trading at the time. Currently, membership is $20 per month or $228 per year. You can follow me on YouTube, Twitter, Instagram, or TikTok under SPY Optionaire, or Reddit under Daddy Dirch.